Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Sherry D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect live with us on a WhatsApp number that will be flashing on the top of your screen. But before that, let's have a look at what the markets are up to. So, Cheryl, quite a muted trading action since the morning. Not much of an excitement except for the fact that the broader markets are still in.
Absolutely. A very good morning to you, Shrishti. And like you said, the markets are doing absolutely nothing when it comes to the benchmark indices or for the matter of fact, Nifty Bank as well. We had a weak handover coming in from the US markets on an overnight trading session. You had also the Asian markets that were pretty much subdued, and that's how it is trickling in for the Indian markets as well. Broader markets, they have been charting their own territory. Remember that they hit record high levels yesterday as well. And today also pretty much perked up in a trading session. Let's take a look at what the rest of the markets are doing and which are the individual stocks that you need to watch out for. Let's talk about the Nifty gainers then. We have Divi's Laboratories as the top gainer on the Nifty, followed by Cipla, Sun Pharma, HDFC Life as well as SBI Life. So you can actually say that the pharma stocks are leading the gains on the Nifty at this point in time. But on the flip side, if you look at the losing end of the market, you have Hindalco, NTPC, JSW Steel, Grasim, Infosys. They are the other set of losers in trade today. Talking about the rest of the market in the sectoral indices front is the metal index that is actually taking a knock again in today's trading session. If you look at BSC metal index, that's down in excess of 1%. Metal index, Nifty metal index is down almost 0.9%. Realty index also under pressure. IT index also seeing a shade of red in today's trading session. But on the flip side is the pharma sector that is holding on to strong gains. 1% uptick coming in the pharma sector. As well as you have FMCG index also that is seeing good strength in today's trading session. But you can't say the same when it comes to the rupee market or for rupee market for now, at least, Shrishti, because if you look at dollar index that has hit a 6-month high, and if you look at euro, that's hit a 3-month low against the dollar. You have Australian dollar as well as yen that is actually under pressure when you compare that with the dollar index. But if you look at rupee as well, we have actually weakened past the 83 to the dollar mark. That's what we did in yesterday's trading session. And today as well, you have the rupee that is pretty much subdued in line with what the rest of the currencies globally are doing. And remember, the dollar index, like I mentioned, has hit a 6-month high. But it's not only dollar index that's actually gained, isn't it, Shrishti?
Well, yes, Cheryl rightly pointed that quite a muted action in the equities market, but a lot of action when it comes to the currencies as well as the commodity space. Look at the move that we are seeing in the sugar prices. Domestic sugar prices are sitting at a six-year high. Other than that, we have been talking about metals, but most importantly, have a look at the crude oil prices, because Brent crude oil prices have hit a 10-month high, surging to the $90 per barrel mark, and now rising crude prices have a broad-based impact on the Indian economy. And to decode all of this, we are being joined in the studio by my colleague Somit Sarkar. So Somit, crude oil prices, major implications on the global economy as well as in the Indian economy. Why are we seeing the surge as well as what could be the after effects?
The why part is because Saudi and Russia have actually went ahead and they have said that they'll keep the cuts that they had announced earlier till December 2023. Now, Saudi will be extending their voluntary cut of around 1 million barrels per day, while Russia will be extending their voluntary cuts of around 0.3 million barrels per day till December 2023. And they also said that they will review this cut that they have extended every month. So this will be important to track whether they continue with the cuts ahead or not, because that's how, and that's what will decide the trajectory of crude oil prices going forward. Now, what will be the impact on India? Firstly, why the impact on India? Because India imports nearly 80% of its crude requirement, and every $10 per barrel rise in average crude oil prices inflates the current account deficit by around 14 to 15 billion US dollars. That is nearly 0.4% of the GDP. And when it comes to inflation, every $10 per barrel rise in crude oil prices inflates the inflation by around 50 to 60 basis points as the retail inflation, and the wholesale inflation increases by around 125 to 135 basis points. So it has a broader impact on the Indian economy because crude oil, nearly 80% of the crude is imported in India.
Absolutely. And add add to that, also you have the rupee weakening, so that will definitely put the pressure on our balance of payment. But this is why the crude is rising, what impact it has on the macros. But let's talk about individual stocks. We all know when you talk about crude, the first thing that comes to your mind is definitely the OMCs or the oil and gas company. But it's not only limited to that, right? Because you have a lot of companies that use crude as a raw material.
Well, yes, definitely right, Cheryl. Firstly, on the oil marketing companies, because they will be getting impacted the most, because they are the ones who are selling the crude, refined crude to, in fact, all the consumers. And the reason why they will be impacted is because crude is their raw material, and that prices have been increasing, but the prices of retail fuel, that is petrol and diesel, have remained largely stable, in fact unchanged for a very long period of time. And given the fact that now crude oil prices are at $90 per barrel, the gross marketing margin that oil marketing companies earn on selling every liter of petrol and diesel, that has come down sharply. In fact, on petrol, the margins have come down to around 5.5 rupees per liter from 13.7 that we had seen in the June ended quarter, and for diesel, in fact, it has turned negatives 5.7 rupees per liter from positive 9.1 rupees that we had seen in the June ended quarter. Now, when it comes to oil explorers like ONGC, HOEC, Oil India and Vedanta, for them generally a rise in crude oil prices should be beneficial, but given the fact that the government has introduced windfall taxes on crude production, their gains on rising crude oil prices have actually been capped. So this rise in crude oil prices would largely be neutral for these companies. Now, there are a host of other companies that use crude as their raw material. Like there is paint, which has nearly 40% of their raw material cost derived from crude. Then there is aviation, where crude oil prices or ATF prices form nearly 40% of the total expense. Lubricant manufacturers, nearly 50% of their RM cost is crude related. Then there is tires, cement, also which have nearly 40 to 50% of their cost either directly or indirectly related to crude. And then there are a host of specialty chemical companies like Balaji Amines, Alkyl Amines, Camlin Fine, Clean Science, Rosari Biotech, Nossel, Aarti Industries, Atul, Vinati. These companies also have nearly 40 to 50% of their raw material prices related to crude, and a rise in crude oil prices, at least with a lag effect, will definitely impact the raw material basket prices going forward.
Okay, Soumit, thank you so much for highlighting all those details, why the crude oil prices are rising, as well as what could be the stock-specific action. But with this, viewers, let's move on and let's get the expert take on the back of this news flow, not just the crude oil prices, the kind of surge that we are seeing in the commodity basket. Let's understand that which stocks could be in focus and what will be your strategy on the same. And for that, let me welcome on board two of our very special guests, Sharmila Joshi on the fundamental side, and also on the technical side, we are being joined by Kunal Bothra. Very good morning to both of you. And Kunal, let me come to you first, because Soumit just highlighted the rise in the crude oil prices and the stocks that will be in focus. And we have been talking with you regarding the sugar prices as well as the metal pack. So you have a basket full of stocks. So amongst that, any particular stock that is on your radar, and specifically on the crude related stocks that are in focus, the OMCs majorly, because we are seeing weakness in those counters in today's trading session. So what should be one strategy in the same?
Good morning, everyone. I think partly yes, because many of the OMC stocks, I think in the last 1.5 odd month, has already started to go into a corrective phase. So we look at the recent tops for the likes of IOC, BPCL, HPCL, and these stocks have corrected somewhere in the tune of 7% to 10% broadly in the last 1 month. This moves in sync with how the crude oil prices have behaved in the last 1.5 odd month, where you've seen a gradual rise, pick up of price action for crude oil prices. It's given a golden crossover on the daily charts, I think 3 days or 4 days back, 4 trading sessions back for crude oil prices. So that's also another important technical parameter to take note of. But then the impact, is of course being reflected into the OMC names. Even the paint stocks, I think gradually would probably get into a correction, the likes of Asian Paints, Purge Paints, etc. So sugar, my sense is that many of the sugar stocks are actually breaking out, and these stocks could be up for a decent upside. But for the paints as well as for the OMCs, I would be a lot more cautious.
On the paints and the OMCs, but sugar stocks may see some upside. That's the take coming in from Kunal. Very good morning to you, Kunal. Good morning to you as well, Sharmila. And what's your take coming in? It's a huge basket of stocks that we are discussing. Yes, crude, sugar, and also what's happening with the rupee. But given the fact that it's a diverse sector that we're talking about, What's your take? What is the single thread that ties all of these commodity-linked stocks together? And what will be your take on what should an investor do? Should they look at these sectors right now?
Is that for me?
Yes, for you, Sharmila.
Yeah, I briefly lost connection. So anyway, I think that coming to rise in crude prices, I think more than the immediate rise that we see, I think the commentary that you got along with it, that this will be reviewed. So there is a possibility that this could be in this for a longer haul. So you need to see how really how crude prices behave over the medium term, because I think that it's not a single stock or a single sector. I think when you are talking, especially in the Indian context, as you all were discussing, I think it's negative for the economy as a whole, because it will definitely put a spanner in the works as far as that whole inflation bit, as well as where interest rates are, etc. And not just for us, I think even globally. So let's see how this thing proceeds. But I would then therefore be a little circumspect on markets as a whole, in fact, and we've seen that run up. So I think the obvious sectors are what will have. I wouldn't consider oil marketing companies at all, because the windfall tax gain sort of negates any benefit that could come to oil companies. But the obvious are paint companies, then companies like Pidilite. I think going forward, consumer good companies, FMCGs. Anyway, we are seeing a slow uptake because of concerns in the rural market. So I think it will sort of slow you down in terms of the enthusiasm with investors approach a lot of the mid-cap stocks.
And also, Sharmila and Kunal both I know that Kunal did speak about the sugar stocks. We've also seen what's happening with the sugar prices. Globally, it's at an 11-year high. Domestically, sugar prices at a 6-year high. Kunal is of the view that he will see some more run-up in the sugar stocks. What's your take, Sharmila? And also, Kunal, it's good that you have sugar. You have your coffee without sugar, isn't it?
I think I left that coffee without sugar long back. I'm back to sugar now.
What about you, Sharmila? Do you think that you should avoid actually, at least with these sugar counters in your portfolio, or you should actually have a pinch of sugar every day?
I have a very sort of a neutral to negative stand on a lot of these soft commodities, especially things like sugar, because we are big consumers of sugar as a nation. And it is, then when, as now we are getting into festival season, and if sugar prices go up, then, there will be sort of political control on that. So, it's very difficult to take a call on the stocks, therefore, because you could say that, international prices are up, so sugar companies will be able to export, etc. But then you will find that the government cuts back on what you can export, etc. So, it definitely follows a cycle, and if you get it at the lower end of the cycle, sugar stock, sure, you can think of buying. But by and large, I would really avoid this.
All right. Avoid the space is what Sharmila has to say, and not a pinch of sugar. It should be spoonful of sugar. But Shashi, given the fact that everybody is now avoiding sugar, so it will be pinch of sugar only, isn't it?
Could be, Cheryl, and feels like it's time to control that sweet tooth cravings. So let's see how much we can do that. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where you get your answers for all of your stock-related queries. Remember, viewers, you can actually write to us on the WhatsApp number that will be flashing shortly on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in, then make sure that you mention the buy price, the quantity, as well as the time horizon that you're looking to invest in a particular counter. With that, we will be able to help you better. And talking about our experts today, we have Kunal Bothra as well as Sharmila Joshi joining us on the show. Very good morning to you, Sharmila, as well as Kunal once again. And let me kickstart taking all of your stock-related queries that are coming from our viewers. And this one is coming in from Pratiksha, who's writing to us from Muscat. And she's holding Petronet LNG at a price of 240 rupees per share. What is the best price that she can get on the charts, Kunal, from the long time? Because she's saying that the stock has been consolidating and it's just started to see an up move now. So she wants to know what's the best price she can get in a month's time.
See, I'm frankly not a fan of the charts for Petronet. The stock has been consolidating for, I think, the last 6 years or 7 years. 2016-17 is where the stock had entered into a consolidation. Now, this recent rise in the crude oil prices may have probably been one of the reasons why you're seeing this rise or the rally in stocks for Petronet. But it's about an event. Once that event dishes out, you would probably be in a situation where the stock may get into a consolidation yet again. So it all depends on such kind of events. If you are sitting in good profits, even if it's a short-term profit for a stock like Petronet or something which you've been holding on, say for example from long-term play, I think it's best to get out.
Okay, that's the take on Petronet, LNG. But moving on, and Sharmila, the next query is on Deepak Fertilizers. The query is from Hemanta from West Bengal, and she's holding 160 shares of Deepak Fertilizers at a price of 620 rupees. She wants a medium-term view on this particular counter, and since the past 6, 7, 8 months, we haven't seen the stock doing much. So, do you believe that this stock has the potential to give some returns from the current level?
Yes, I think so. I think that first of all, there are probably 2 times in a year when fertilizer stocks are in sort of action. One is around budget time when the whole subsidy, whatever story starts, and one is obviously in the rains when you want to see how much of revenue, etc. is earned. But if you look at Deepak Fertilizer and the fact that it's been that way, a pretty consistent stock, and even in terms of results, where the its valuation is at the moment, it looks reasonable. I would put a target of around 710 on it, and I would say continue to hold.
All right, the next one is coming from Prathamesh from Mumbai, and this one is for you, Kunal. He has 300 shares of BHEL at a price of 105 rupees per share. He wants to know whether he should hold or book profits. He's saying he can hold on to for the next 3 to 4 months. BHEL, I believe, would be the ITC of the year 2023. Looks like it. Kunal, out of the blue, this one has started actually performing exceedingly well week after week. And yes, owing to what is happening in the power sector as well. So what should he do? Should he continue to stay put with it beyond 3-4 months, or what should his strategy be when it comes to BHL? Because I'm sure everyone is rubbing their eyes, wondering what's happening with the stock.
Well, absolutely, yes. There is a sense of a shock and awe treatment from the rise in BHEL. But then, this is what patience and trying to identify stocks at an early stage of a breakout, much prior to when the momentum kicks into the stock price, always rewards into. I think I remember BHEL. We've been starting to recommend on the show as well as on the channel closer to 76, 80 levels, and the stock is almost at 135, 140. If I'm not wrong, the stock hit yesterday. Now, there are two parameters for the viewer who's asked the query. One is that he's restricting his time horizon to 3 to 4 months. Now, first things, I don't expect the stock to give you a stellar kind of a return what it has already shown the last 3 or 4 months for the next 3, 4 months. So it's very much possible that the stock will just fluctuate around this 135, 140 mark, because when there are too many opinions flying positive for the stock price, it's bound to get into a time-wise correction as well as a price-wise consolidation. So if you're sitting at profits of 30% proximity for a stock like BHL, it's a very good time to try and book out profits because your time horizon is short term, and then wait out for a phase of correction. So even if you get the stock maybe 10, 15 rupees cheaper than the current levels, say closer to 125 or below, that could be a point where you may look to consider re-entering the stock.
Okay, moving on, and Kunal, once again coming to you because this query is specifically for you, coming from Tushar from Delhi, and he wants to know, is this a good time to invest in Divyani International for a 6 months to 1 year time perspective?
Well, again, one of the stocks which I've been advocating since closer to, I think, 170, 175, I've been time and again mentioning that that's a huge demand zone for Divyani International, and if the stock gets into that territory, you should look to buy. Now, closer to 212, 213 levels where the stock is trading, see, what you can do is you can start entering maybe 30% or 40% of your expected quantity which you're looking to buy the stock price. Because the only concern with a stock like Divyani International is with the timing of the market structure, because right now we are the mid caps and small caps are into a different kind of a frenzy. So if there is any kind of a correction, you don't want to be left buying the entire quantity at the top end of the price and then you're just waiting or to trying to ride the corrective way for the stock price. So it's better to try and take advantage of the correction. So you can start nibbling at current levels and then keep on adding in case if the stock dips to say 200 and then 170 mark.
All Right, Sharmila, next one is coming for you. This one is coming from Pramod. He's writing to us from Trishur, and he wants to ask about two counters. One is Avalon Technologies, 400 shares at a price of 380. The next one is Hudco at a price of around 37 rupees per share. About 1,000 shares is what he has of Hudco. What should he do with both of these counters? Do you think it makes sense to stay put with them for the next 2 to 3 years?
The first one was Avalon, right?
Technologies, yes.
Yeah. So, yes, I think Avalon Technologies, where the valuations are and how the numbers have been, I think definitely he can stay put in Avalon Technologies. And possibly, you could be looking at targets of around 680 or so. The second one was Hudco, is that right?
At the price of 37.
At a price of 37. Yes, so I think once again here the valuations seem a little stretched here, so I'd be a little careful. But since you bought at such a much lower, I think you can stay put for the bid. Perhaps you could see levels of around 82 or so. But this I think looks a little stretched at this point in time.
Okay, Sharmila, coming to you for the next query. This one is from Krishna Das from Bangalore, and he wants your take on IEX. Just yesterday, we did connect with the management after their August operational data, and today we are seeing a flattish sort of a move on IEX. Krishna Das has 1,000 shares, but his buy price is 203. So at this point in time, do you believe that it's a good time to average this particular counter, and what will be your advice?
So unfortunately, one good story that has been spoiled, or whatever, the changing government policies and that uncertainty has taken its toll on what I think was a really good, conceptually very strong stock and a great idea. So I am a little ambivalent about this, very honestly, because while I think that this is not the correct price to sell and there is an upside from here, but I would be reluctant really to stay invested in this for the long term, because time and again we've seen some moves coming in which sort of spoil either the outlook of revenue, or there is a possibility that it could get that uncertainty comes up and then the stock gets sold off. So I would really exit the stock maybe at around 160 levels.
So it's coming from Ramamurthy from Bahrain, and Kunal, MTA Tech, should he look to buy this one, and what sort of buy price he should see? And also Tech Mahindra, he already has this counter, 21% profit is what he is sitting on. Should he look to book out of this counter or wait for some more upside?
So Tech Mahindra, I would recommend to hold on. MTAR Tech, I would believe may not be the best price to buy the stock, because the volumes and the indicators are showing a bit of a mismatch over here. So volumes have in the last 1 week have risen up exceedingly high. But surprisingly, the indicators have gone into a bit of a shallow mode. The prices are into a consolidation, which means that maybe the stock would witness a correction in the next couple of weeks. So I think it's best to try and wait out for MTAR Tech, not to buy at current levels. I would wait out for at least a retracement towards 2,400, 450 before I would probably believe that maybe the near-term bottom could be in place. So to hold Tech Mahindra and to avoid the MTAR Tech at current levels.
Okay, Kunal, once again coming to you. This query is from NSS Lakshmi from Vijayawada, and she has two counters in her portfolio. 1,000 shares of Camlin Fine Chemicals at a price of 120 rupees. Back in November 2020, she purchased this counter, and she also has JTE KT India, 400 shares at a price of 81 rupees. So sitting at good profits in both of these counters. Advice to book profits or continue to hold on?
Yeah, book profits on JTE KT. I think that's a stock which looks a bit more toppish on the charts, and Camlin Fine is something which I would believe we can continue to hold on. Now, the only reason for suggesting a hold on to Camlin is because, say, in the last 1 or 2 months, the stock has risen from 150 to 180. It's gone through 3 or 4 days of correction, mild correction so far, which means the retracement is already started to happen for Camlin Fine. Whenever the next round of breakout could happen, the stock should take past or at least cross about that 180 mark. So you can have a slightly better edge in terms of selling the stock, maybe about 180 or 185 levels for Camlin Fine, even if it's a short-term kind of a trade.
Okay, this one has come from Michael. He's from Mumbai. He's a positional trader, Kunal. He's bought NTPC at an average price of 219 rupees per share. Should he hold it for the longer term exit or average?
If you're a short-term trader and then you are looking to hold on to long-term, I'm not sure what exactly you're looking out for. But for NTPC, I'm extremely bullish. Now, NTPC is a very slow-moving stock, and if a slow-moving stock gets into a big breakout, then there is a complete change of behavior and change of trend which happens for a stock like NTPC. The stock has not yet given a lifetime breakout. I think that breakout level for NTPC is around 240-42 mark, which means even if you are a short-term trader, you could be looking at 240 plus as a immediate target for NTPC. That could be a better zone where you may look to book out full profits.
Okay, that's the take coming in on NTPC. The stock has been moving in a great fashion in the recent while. But with this fears, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Answers for all your stock related queries, and onto the show today we have Kunal Bothra and Sharmila to help you better. And Sharmila, coming to you for the next query. This one is from Jay Krishnan from Kerala, and he wants your advice on two counters. Firstly is ABB India, and the other one is also a mover today, that is Navin Fluorine. Can he invest in both of these counters? Are these worth investing with a medium term outlook?
So ABB India is already, I think, at levels that we haven't seen in the stock maybe in the past 3 or 4 years. So from that sense, if you enter at this point, I don't really see a problem, but you must keep that in mind that the stock has rallied significantly from the levels that it was at, and it's not going to keep rallying at that same pace, because now in terms of valuations as well as there's not really much left on the table. But it's a good stock. If you're in it for the long haul, then definitely you can buy it, because then you will probably sort of justify buying at such a high price. Coming to Navin Fluorine. Navin Fluorine was the other stock, right? So of late we have been seeing a bit of a sort of resurgence in chemicals as a space, and within that space, specialty chemicals is a space that I like. Again, here the stock has rallied from lower levels. So in that sense, from a valuation perspective, it's if you're once again, if you're in it for the long haul, then stay invested. Between the two stocks, I think I prefer an ABB. Because at the end of the day, Navin Fluorine is a sort of a commodity play, and while it's doing well now, when prices correct as we saw in the recent past, then stocks can correct a little sharply, whereas ABB is sort of a more, it doesn't go through very sharp corrections, because it's been a sort of a good quality name. So between the two, I prefer an ABB, but both have run up, so you need to keep that in mind.
Okay, the next query is for you, Kunal. This one is from Kaushik Mitra from Mumbai, and he's holding ICICI Bank as well as IRCTC. ICICI Bank from a price of 870 rupees and IRCTC from a levels of 831. So currently he's losing on IRCTC. So how does both of these counters look on chart, and what will be your advice?
Very difficult to gauge that when would the stock break out or come back into the line of performing back. So you can probably hold on because of the quality of the stock. It could just be a matter of time. But the question is that how quickly can the stock move up higher? So I think that's the imponderable for ICICI Bank. For IRCTC, on the other hand, I think a better strategy is in case if the stock dips down towards 665 or 675 range. That's actually a range where you may look to even consider adding on to more quantity, or trying to increase the quantity so that you can bring your cost price to maybe 725, 730 odd mark for IRCTC as a net price. So I think that's a better strategy for the stock if you can try and do that, because I believe that from the railways pack, this is the only stock which has underperformed in the last 3 months, 6 months, 9 months or so. So whenever the stock would probably play a catch up, we've seen historically that how fast and swift the stock can tend to move up higher. So I would suggest a buy on IRCTC or maybe an add on IRCTC at this range of 670 approximately. And for ICICI Bank, I would just continue to recommend a hold.
Okay, this one is coming in from RK, and he's a long-term investor. Tricky question coming for you, Sharmila, because he's saying that yes, I have seen the broader markets rally, small cap index also rally quite a lot, but despite the rally, he wants to go ahead and venture into these counters. Is it advisable to actually participate right now in the rally, the broader markets rally, especially small cap? And also among the small cap stocks, should he look at Finotech's chemicals, Gokuldas, 5-star, rights, such kind of companies, or is there some other strategy that he should adopt altogether?
So this, as you said, is a big question because I think that what we're really seeing is that the mid cap and small cap space is absolutely on fire. And let's not forget that for retail investors, this is sort of the preferred space to be in. And while you may have like a conservative portfolio which is in large cap stocks, I think a bulk of your earnings come if you can identify good mid cap stories reasonably early. So now what you need to bear in mind is that you will have to really dig hard to find reasonably early because a lot of the stock stories, mid-cap stories are now discounted because they've already run up significantly. So I think the challenge now is that if you're really trying to invest in these stocks, be sure that it's a story that you want to be committed in for the longer term. Also try to see that you keep your mind open to averaging down, though that is honestly not the preferred strategy. If you can average up, it's always better. But if you need to keep your mind open given the fact that a lot of stocks have run up. And I think try to stay away from names where there are a lot of stocks which are just rallying to my mind without, in my opinion, there is really no great fundamental story playing out. But it's a lot of this can happen, that can happen, those ifs and buts kind of a thing. So that I think, you should be a little careful about. But if you find a stock where earnings look good and it, in your opinion, can continue to look good for the next couple of years, then yes, I think, you shouldn't sit this market out because obviously it's trying to tell us something that the mid cap, small cap space is the space to be in.
Okay, moving on to the next query then. And Kunal, Jasleen has bought shares of Voltas at a price of 810. The stock showing good moves today. But is this a time to book profits in this one? And any targets that you can suggest? And he also wants a suggestion on data patterns and any targets for the same as well.
So Voltas, I would recommend to book profits over here. But then I think after this gap up today, which you're seeing, one thing is certain that the stock is getting ready for a big breakout. But the reason why I would recommend a book profits is because of the gap up today. And typically we've seen that in a market which is getting a bit more sluggish, you would probably expect that this gap up may not sustain for a long time for such kind of stocks. That's the only reason for suggesting a book profits. And then you can look to buy back in case if the stock dips back towards 860 mark. For data patterns, on the other hand, I would probably expect the stock to get into a further rally mode. So it's going through 3 days of correction so far. Historically, we've seen at least 5 to 6 days of consistent correction for the stock. So if it comes back towards 2,300 or 2,275, that is a zone where you may need to average. Wait out for a target of 2,475 to 2,500 for data patterns.
All right, the next one has come from Sham. He's writing it to us from Nasik. One more for you, Kunal. Bank of India, 1,775 shares at a price of around 93.6 rupees per share. What should he do? He's not basically mentioned to us his time horizon. So on the charts, how does Bank of India look to you?
So only if you're a long-term trader or investor, only then it makes sense to hold on to the stock of Bank of India at current juncture because the bank nifty is definitely struggling and we've seen the private sector banks underperforming. It's just the PSU banks which have taken on a lot more load on the upside in terms of the price weightage. But then, if the bank nifty starts to get into correction, even the PSU banking stocks, I believe, could probably get into a near-term correction. So I think just on the basis of that fact, you can look to book profits if you are a short-term trader. But if you're a long-term trader and with a time horizon of say 2 years at least, then definitely look to hold on to stocks like Bank of India. In fact, you can even look to add the stock in case if it dips down or corrects say 5% to 10%.
Sharmila, the next query is from Gopinath from Hyderabad, and he's a long-term investor and 2 counters in his portfolio. First is Lokesh Machines. I'm not sure whether you track this one, but he's holding. He wants to buy 100 shares at the current market price. So, is this counter worth investing? And he also has Laurus Labs, 25 shares at a price of 385. So, can he add more at current market price? He's looking to stay invested for the next 1 to 2 years.
So let's talk of Lokesh Machines first. I think the valuations seem reasonable and the results also seem okay. So I think yes, you could possibly buy this and stay invested in it as you have indicated for the next couple of years. That should be okay. For Loris, I think things are going to be a little difficult, a little patchy, but I think the worst is behind the stock in that sense, and we are seeing some sort of they've been seeing a lot of pricing headwinds, and the kind of global agencies, their procurement, etc. They have faced a lot of concerns. So I would very honestly prefer some other pharma stock, but in a price sense, I think the worst is now behind. So I leave it to you, but I would honestly prefer another.
All right, this one is coming from Sitaram Ganesh. She's writing to us from Chennai. Kunal, quickly, Dixon Tech already has 13% profit in this particular counter. What should he do? Also, any defense stock that he should look at, given the fact right now to invest in, most of them have seen good run up.
Yeah, most of them have seen a good run up. So from the defense pack, I would suggest a wait out. Wait out for at least a 10% correction. 10% would be a very minor kind of a correction given the kind of rally these stocks have shown. So wait out for at least that to play out for many of the defense names and then start nibbling into the stocks. Dixon Tech, I would suggest to book out profits over here. The stock is forming slight, or showing indications of forming a bearish wedge pattern, a rising wedge pattern. That could probably result into some bit of more profit booking on the stock over the near term. So if you're sitting in profits, book profits on Dixon Tech.
Okay, that's the advice coming in on Dixon Tech. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And as we speak, you have the markets that are drifting a tad bit lower, but yes, not as much as the US markets were down. Let's continue taking your queries. This one is coming from a viewer who's not mentioned his name. He's investing, he's already invested in HCL Tech as well as IOB. I'm not sure what the long term is, but what the buy price is, but is it right investment is what he's asking me. So Sharmila, since it's a tricky question for me as well, given the fact that he's not given all the details, let me ask this question to you. HCL Tech, IOB, at whatever price he's invested, for the long term, do you think this is a right strategy?
So HCL Tech, definitely, I think among the large cap IT names, if there is one name that I do continue to like, it's HCL Tech. I think that over a period of time, we have seen that a lot of the IT companies have their sort of differentiated models, and within that, I think given the fact that HCL Tech has a sort of a mix of business and the sort of the inorganic growth that they've done, that has also started paying off. New management that has also sort of shaped up well. So I think this stock has a lot of positives for it going ahead. So this I would definitely continue to stay invested in. And which is the other stock? Is Indian Overseas Bank, is it?
Yes.
Which was the other stock?
Indian Overseas Bank. That's the one. IOB.
Okay. I don't really have a view on this.
All right, no problem. Let me take the next query then. And this one is coming in from Sudeep. And Kunal, Sudeep wants to know whether he should hold on to Vaibhav Global. The buy price for Vaibhav Global was 394 rupees per share.
Good time to book out profits. The indicators are overbought. The volumes are a lot more inconsistent for the stock price. I think best time to try and book out profits on a stock like Vaibhav Global.
The next query is from Balaji from Chennai, and he wants your advice on Bank of Maharashtra as well as Jio Financials. Can he buy both of these counters at current market price with the short to medium term investment horizon? Kunal, this query is for you.
You'll have to repeat the stocks. Jio Financial
Bank of Maharashtra and Jio Financial.
So Bank of Maharashtra, I would suggest to buy the stock closer to 36. My sense is that the stock should go into a mild correction. I think I've mentioned this about many of the other PSU banking stocks, that if the banking stocks would probably, or bank gets into a correction, you could probably expect that the stock may also get into a slight corrective mode. For Jio Financial, I won't be able to comment because the data is a lot more restricted and limited.
Okay, Sharmila, any quick advice on Jio Financials? Good time to enter this one?
No, I'd wait a bit. It's a stock I like, but I think allow the stock price to sort of settle down a little bit. So I think give it another month.
All right. This next one that I have is coming in from from TP Vinod, and this one is for you, Kunal. He has about 250 shares of Home First Finance at 775, 450 shares of Prince Pipe at 650 rupees per share. He wants to know what's the target for both of these counters, and he's been holding for the last 1 year, can hold on for the next 1 to 2 years.
Yeah, continue to hold on to both of these names, Prince Pipe and Home First. They look attractive on the charts. Very steady kind of a trend so far into these names. Have been trading above their respective short-term moving averages, both the 50 and the 200 moving averages for these stocks individually. Looks attractive. I would recommend a hold.
The other query is from a fan of yours, that's Bhagwan from Mumbai, bought 500 shares of Motherson Wiring at a price of 65 rupees. So what's the outlook on this one, and can he buy Ircon at current market price? And if not, then maybe he should adopt buy on dip strategy, and any price that he could enter in Ircon?
See, my sense is that many of these railway stocks should go into at least a 15 to 20% correction from their recent swing highs. So you can calculate accordingly. I think Ircon made a high of 130 approximately. So by that, you would expect 115 to 105 as a modest range in terms of where the correction could probably seep into the stock price. So you should not be in a hurry to try and buy these stocks and wait out for your range to play out into these names, and then buy in staggered quantity or staggered steps. For a stock like Motherson Wirings, I would recommend a hold because again, it's been a late moving stock, consistent charts over the last 6 months or so, made a low of 47, 48, I think 4-5 months back, and then now moved into a zone of closer to 60 plus mark. So looks attractive as a chart, more steady in nature, would recommend a hold.
All right. With that, let's actually kickstart with the rapid fire then. And the first one that I have is coming in from our viewer, Shekhar, who's writing to us from Chennai. He's bought CUB at a price of 147 rupees per share. For the long term, should he look to average or continue to hold on to this one? Sharmila, City Union Bank, what's your take?
I think he can continue to hold.
Kunal, advice on Castrol. Raj has bought shares at a price of 144 rupees. Any targets for the same?
I think good time to book out profits.
Okay, Kiran Krishnamurthy has a query for you, Sharmila. He's writing to us from Australia, wants to know multi-bagger stocks. He wants to buy for a lump sum of 5 lakhs for a period of 5 to 7 years. Which one do you think he should look to bet on?
It's very difficult to say which can be a multi-bagger, but a couple of mid-cap that I like are one to look at is Ultra, another is Shell, another is Blend Technology.
Kunal, what's your advice on Balrampur Chini? Satya has bought shares at a price of 350 rupees.
Would recommend a hold on the Balrampur Chini.
All right, Kunal, is it right time to book profit and exit from GLF at a price of 433 and IRFC at 26? Sushil Kumar wants to know.
IRFC, yes. DLF, if you're a long-term investor, you can continue to hold on.
Okay, Sharmila Rima from Pune wants to know good time to enter Nykaa and Avalon Technologies.
I think I would avoid both.
All right, Sudha wants to know about whether she should. Okay, so that doesn't have a stock-related query. Okay, this one is come from Sri Krishna to 365 shares of Engineers India at a price of 168. Should hold or sell? If hold, then for how long, Kunal?
I think you should look to exit.
Okay, Kunal, Ram from Coimbatore wants to know the medium-term outlook and right time to buy Campus Activewear and Rajesh Exports.
Campus Activewear, I would not recommend a buy. The stock is underperforming, and so is the case with Rajesh Exports.
Okay, quickly, Ram, who is a senior citizen, is writing to us on India Bulls Housing Finance, 20 share at a price of 1200 rupees per share. Is it advisable to average or should he look to exit? What's your take coming in on this particular counter? Sharmila, he's in heavy loss.
I think he should exit.
Okay, but with this, viewers, we are completely out of time in this edition of Buy Now, Sell Now. Thank you so much, Sharmila and Kunal, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together as well. Thank you so much for watching. But stay tuned. Markets at noon will take the action hit.